Hi, everybody. Let's have a good week. Who's up for a good week? Mine started last night. I'll show you. Hi, Kevin, Brock, Hugo, Ren, Arena, Trapal. Nice to meet you. Stephen Surrey. Nice to meet you too. Okay. So 1.9 trillion. This was the easiest buy the rumor, sell the fact I've seen in a long time. So, we rallied after Friday's nice close right back to this zone, which had confluence. It was both 61.8 and ended up being support. And this is the whole move down. So as long as we stay under here, I think there's a chance that we break down this week under 37.25. So, I mean, this was good for, 70 handles right here. Hello, Monica. And even the oil, it's coming back now, but just check this out. And this is one that's besides crypto, it's the strongest instrument on the board. There was an attack, but no damage on the Saudi oil facility. Hello, Sinatra. So look at this. So we actually had divergence here, and this fooled me. I lost some money there, because we blew one more time. But look at what happened after we blew. It's actually diverging for a second time up here. So you may not want to short it, but if you've been fortunate and smart enough, hello, Mark, Monica, to have been long energy, which was a tremendous trade. It's not a profit till you take it. I'd be considering taking profits here. Gold held that level and gave it up. It's trying to give it up here at 1686 with the strong dollar. Dollar still, I think, has plenty left to go. Talked about there was no reason to be short the dollar, right? Hi, DJ. And Canada is still working. Canada actually ended up being last week. There were many better shorts with the dollar rallying, even the dollar itself, than Canada. But to me, it still looks like we have like an ascending triangle or head and shoulders developing with like the neckline being here. We've had this hit and this hit. So once we take it out, 130, 131 is a potential target in USD CAD. A break in oil would certainly, add a little fuel to the fire. Okay, I have a great guest today, Nick Santiago from In the Money Stocks will be with us. He's a GAN aficionado, and mainly his rooms are mainly about equities, but he covers a lot of things. I've talked to Nick many times over the years, even going back to FX Street. So it's been a while. It's going to be nice to hear from Nick. So stick around for that. And how are you, Blake? Good morning to you. Monday morning.
I was trying to find my mute button. How's it going?
Pretty good. How are you doing, Blake?
All right. I'm actually just tweeting this out right now. Oh, sorry.
Hi,
So what do you make of this buy the rumor, sell the news?
It was one of the easiest ones I've seen in a long time.
Okay, so the thing is you say that, but it's really early in the day, right?
Well, I mean, if you acted on it, you did something last night.
Well, if let me
rephrase
that. If you were trading futures, you did. If you're, I mean, I'm short risk, so it's fine. I was actually, I had my sister's 40th birthday was this weekend. Is actually yesterday, and so as a part of her birthday present, I'm like, okay, I'll go babysit. No, my nephew, but So I was actually over there last night. She's like almost 10 years younger than me. So, but it was I was kind of watching the markets while supposed to be watching my nephew. And I was like, man, they're bidding up the Aussie above 77 cents. And I'm like, man, that's a recipe for disaster. So yeah, you could have acted on it, but we've been in situations where risk is down, and you see a little bit of risk aversion in North American trade, and then all of a sudden by the end of the day, we're up higher again.
Yeah,
So
like Friday.
Yeah, like Friday was a great example. Like and really, to be honest, between Friday and today, yeah, you look at where the Nasdaq's at, you look at where the S&P's at, you look at where the Dow's at. The Dow's actually higher right now than it was the spike after the and same with the S&P than following NFP. So
Okay.
I'm not in the camp right at this very moment in time that you got to sell risk, but there are a lot of examples right now of things that really look like we're going to see a continuation, and I'm happy about a lot of them too, because I'm long dollar Mexican peso. So I've been screaming from the rooftops on that for the dollar mex. We're well above the 200-day moving average. We've been building a base for a long time, so everybody should know that I'm very bullish and I'm very long the dollar Mexican peso at this point. And I still think that we have some upside, right? I mean, look, it's screaming higher even when stocks are higher. So when I say that about the stock market, let's look at the 15-minute chart of the S&P, or an hourly chart is probably better. Here's non-farm payroll. We spike up, we spike down. This is following non-farm payroll, right? And this is, as Dale pointed out, buy the rumor, sell the news. Stocks come down. Here we are right now, basically. But we're at the highs, or the high after the spike high after the non-farm payroll. And if you look at the Dow, we're higher, right? So yeah, I don't know, Dale. I mean, right at this moment in time, looking at it from trying to have a just like a non-biased point of view, which it's hard because I am long the US dollar, Norwegian krona. I'm long dollar Mexican peso. I'm long dollar Canadian, and actually all positive in all those trades. But it's like, it's hard to come at. I mean, I want to sit here and go, oh yeah, just short risk. That's the way you got to do it. Just short risk. But I've been in those trades since last week, and yes, they're profitable. But am I going to sit here right now and say, oh man, this is just a layup short? I don't know. I'd like to see what happens when the market, it's Monday, and what happens every Monday. It's like, I remember
money
seeing
comes in.
I remember seeing a statistic last year at some point. Like, I want to say it was like November or December. It was a research piece, and I can't recall what bank did it, or it was was like, I don't even know if it was a bank. It may not have been a bank research piece. It was a research piece from like an analysis or fund, whatever. It was just an analysis piece that Monday accounted for like 85 or 90% of last year's gains on Mondays. So basically the market was up on Monday, and then it would spend the rest of the week just giving it back for the most part. I mean, for argument's sake, that's basically what happened most weeks. And so it's Monday. We are theoretically, we've come off of our highs from the overnight highs, but we're really not down too much. But I look at some of these currencies and they do look weak. I mean, you look at the dollar Mexican peso. I know it's all, divergent relative strength and whatnot, maybe overbought, but we're still rallying. You can see here's high, new high, high, new high. So that's not divergent. It's, it's still moving higher. Dollar or the Aussie, we're sitting at a major 38% retracement. Bear flag still points to 75.40, which is basically another 100 pips lower, which I'm short Aussie dollars, and I'm actually short the futures here, Aussie futures personally. I look at my FX board and I'm like, oh, I'm not short the Aussie, but I'm actually short futures. So that's basically being short Aussies right now. But yeah, and you look at the euro. I mean, Dale, do you see how weak the euro is?
Yeah, I see how strong the dollar is.
Yeah, and how strong the dollar. I mean, I have to reiterate that the market is extremely bearish dollars and bullish euros, like extreme sentiment. And I think, and I forgot to go back and look at CFTC data on Friday. It is, I think euro longs actually added this last week, if I'm not mistaken. So here we are almost at the 200-day. And I still think we're going to the mid-teens. 115, 116 is not out of the question at this point. So, and if you're short the dollar right now, you are in some pain, huh, Dale?
Yeah, we anyone that's been listening to us the last couple of weeks, I mean, it started with you seeing the canary in the coal mine with the peso, U.S. dollar max, before the dollar turned, right? So.
Yep.
Yeah, that was so. I mean, anyone who listens to us, I don't think they're long euros.
No, they shouldn't be. Yeah, they shouldn't be. So we've got a really important week this week. We have the ECB meeting, and as yields continue higher, and I want to talk a little bit about yields really quick, because I think a lot of people believe that yields are going to stop going higher. But look, we just got some we're getting some stimulus, right?
A ton of it.
Ton of stimulus. I just read something on Twitter, and I don't know where it was from, but I think like 60% of everybody receiving a stimulus check is putting it in the stock market. I'm like, do you remember, Dale, back in the day? I mean, back in the day, back like 20 years ago, 20 years plus days ago, let me say that again. 20 years ago or longer, those days.
Yeah. I don't think ever they were anyone's during the .com era, anyone's accounts were funded by the government.
No, they weren't. But do you remember when we were younger, the phrase was, the market, or basically the thought process was, the market always turns when the mom and pops get in.
Yeah.
Right? Now, they used to say that. You think about that. They used to say that all the veterans, they would tell you that. They would tell you that because that's when there was so much excitement around buying stocks that basically retail, mom and pops being, oh, it's your mom, your grandma's calling you up. I need to buy Intel. Oh my God, Intel is going up, and there goes Microsoft. I gotta buy. And you're like, Grandma, you're 65. What are you doing? Buying Microsoft? I don't know. It's just going up. That's what everybody says I should be doing. That's like that was the thought process, right? Now it's completely different. Mom and pops, they are in. They've been in. They've been forced into the market. Anybody who is a boomer and older is forced in the market because they can't get yield anywhere else. Like, they've been in for like the last couple of years. And to be honest, that's what's kept
that
them
was
afloat.
the plan. That was the plan.
Yeah, it's kept them afloat. So nowadays, in today's market, it's not the mom and pops that the big money is waiting for. The big money is waiting for retail. And so now you've got retail, you got all these youngsters. I say youngsters, the TikTokers, the, Reddit traders, the whatever. Everybody is piling their stimulus, the $1.9 trillion. Let's imagine $1 trillion of it goes into the market. Who's cashing out? Who do you think? That's $1 trillion that big money is like saying, that's yours, not mine. You take it. You can have it. They're selling into the strength. It is the ultimate, as Dale was putting it, buy the rumor, sell the news, or, they got all retail in. You get all the little TikTokers getting in and buying this last gasp, and they're going to sell into it. Now, how far does the market go down? I don't know, but this is how big money is made. This is how transfer of wealth happens, right? Governments put in 1.9 trillion, $1 trillion of it, but based on like that tweet that I was just reading this morning, it was like 60% or whatever. Let's just say $1 trillion of it goes right into the market. The big boys sell $1 trillion worth of stock, and then they can buy it back, after we drop down 20%. That's just how it happens. And that's what's going to happen again, because it happens over and over and over again. And DJ says, yeah, and 2 trillion infrastructure. Yeah, it's all priced in. So anyway, that's my thoughts. Now, one of the other things I want to point out before I let Steve and Stelios, come chit chat with Dale.
Steve, you mean?
Steve, how about Stelios and Stelios?
Yeah.
Which, to be honest, is it's the accurate thing, since I've explained before that we both have the same name. We're called Stelioses.
What does Blaka mean in Greek?
Blaka.
Blaka means idiot.
Yeah.
Now the fun part I've explained it before. You know that idiot is a Greek. It comes from the Greek
come
word.
on, Steve.
Oh no, here we go. This is like my big fat Greek wedding. Oh my gosh. So just so you guys know, this is kind of funny. I want to tell you guys something. So, for those people that don't know, I got married in Greece in 2003. So it's 18 years ago.
Milos.
In Milos, yes, I got married in Milos, and so to get my wife, she's half Greek. My father-in-law is from Athens. So before the movie, My Big Fat Greek Wedding came out, and of course, my father-in-law owned a restaurant for 100 years here in the Phoenix area, just like the movie, right? He would always say to me, like, this is so funny. He would always say to me, I would say, I would say some word, and he would say, oh, that word in Greek, that actually is a Greek word. It came from this and this. He would say it all the time. And then the movie came out, and we couldn't stop laughing. I mean, it was like the funniest thing I've ever heard in my life. Just seeing it on the big screen. And then after that movie came out, he never did it again. Ever. It was funny. Anyway,
in any case, whenever I mention it, I don't mention it for bragging rights, because, as I've said before, unfortunately, ancient Greeks were extremely wise and ahead of their time. But I can't claim the same for
what happened to your generation.
Not only a lot of generations. So at one side, how much can you be proud of ancestors that came so far before you? I mean, it's more important to be proud of what you have been doing recently than what your ancestors have been doing. It is important, though, because it gives you a better understanding of the ethics and building blocks of society, because the Greek words actually always had a deeper meaning. For example, the word idiot came from the word idiotis, which means the person that is more involved with his private matters. And back in ancient Greece, if you were not involved with public matters, that was not a good thing. So it came from a word that didn't have a negative connotation having to do with your IQ, but it had the negative connotation having to do with how you behaved as a human being.
So in other words, then that actually meant, fast forward to today, if you're on Facebook, you're an idiot because you're involved in other people's matters and not your own. Get it?
No, the opposite. Okay. In ancient Greece, if you were not involved with public issues, that was considered a bad thing.
Issues, right?
If you were not involved, because you were considered as a citizen, you had like the right, but also the obligation to, in essence, forward the public agenda. You know what I mean? To participate in public affairs.
Well, that has nothing to do with the market. So
absolutely not.
Let's get into the market. So one of the things I wanted to point out is crude has had a hell of a run, but it's down today, and this is a shooting star that's developing. So what I'm going to say here is with crude, let me just remove this.
So far, interesting reversal today. This is
one
of the things
developing a nice reversal candle. But take a look at the highs that we've taken out. So we took out you could say it was a double top here at that point.
It was a rectangle actually for a long period of time.
So it took out those highs just enough to squeeze out everybody. So my 2 cents is if we drop back below the 63, let's just call it $64. We drop back below $64. That's going to be a pretty big reversal for crude. And that would, if you guys are looking for, stocks to reverse or risk to reverse, I think that's like one of those things that might be suggesting that. But like, look right now, the NASDAQ is at the highest levels since, like Europe, and S&Ps are at the highs of the highest levels since like Europe basically came in. And look at the hourly charts. It's hard to get really bearish risk right now when you have, it's Monday. And like I said earlier, every Monday, the markets are up. Then they spend and I'm just generally speaking, then they spend the rest of the week just giving it back. That is the case and has been the case for most of last year. Is if you take out all the Mondays and all the gains that we've had on Mondays, like through 2020, we probably wouldn't be up. We'd probably be down. But all those gains really come on Mondays, typically speaking. So anyway, I'm gonna let you guys take over.
Thank you, Blake.
All right, guys.
Thank you, mate. I'm also focusing a lot on the divergence between crude oil and S&P because we've seen that in the past, and it usually doesn't last.
Well, there have been reasons for oil to rally, right? First OPEC, now the attack, the Saudi issue.
Yes. But still, even though, as you very well said, Stelio, crude oil very frequently is affected by geopolitical factors and esoteric reasons, still this correlation between it and the S&P remains strong. And usually when one turns and the other doesn't, it doesn't take much time for the other one to follow. So, I'm paying attention. Blake already mentioned it. I just have one more thing here, the channel, because besides the double top that Blake pointed to, I'm also monitoring this ascending channel, which we had an intraday overthrow over it. So this is like a magnificent, triple confluence of resistances up here. And if we do indeed produce a reversal here, I would be very, very careful with risk assets. Perhaps it's time for crude oil to do some catching up, but that will most probably mean that risk assets will continue being under pressure as well. So I think that from a risk reward perspective, crude oil, if it has a negative day to day, I think it might be about time, to see a much bigger corrective move lower, which we haven't seen in such a long time. I'm still of the opinion
it's long overdue, man. It's long overdue
I'm still of the opinion that crude oil is going to end up going a lot higher than people believe. I said a long time ago that I think that we're going to see again triple-digit crude, which when I said it, probably people thought I'm crazy. But I still believe it. I think in dollar terms, we're going to see again triple-digit crude oil at some point within the next couple of years. But we first need to somewhat correct lower. I mean, this trend cannot go like non-stop from like 11 that the continuous made it down to like 100. Markets
in fact,
don't work like that.
Steve, if you're right, $100 3-digit crude would actually be exactly what the green movement needs, okay, for EVs. $100 crude, not as urgent at 30 or 40, but 100.
Very true. Obviously, at $20-30 crude, the idea of electric vehicles having to do at least with cost saving for the individual, I mean, for the retail buyer, makes a lot less sense than $100 crude makes, right? Obviously, there's no question about it.
Yeah. So maybe Biden starts a war with Iran.
One thing is for sure, a lot of people thought that it is impossible to find ourselves back here, because I remind you, when was the last time we were up here? Let's see, beginning of January 2020. What did we have at the beginning of January 2020? We did not have COVID. I mean, we had some first chit chat from China, right? But we were still at the point that the rest of the world didn't even pay attention to it at all. I mean, nobody cared about COVID. It was something that was like esoteric in China, and it was still in the rumor, area. Now, imagine that. Theoretically speaking, with COVID, not theoretically speaking, practically speaking, with COVID, we've had so much reduction of demand. People are locked down. A lot of people are not moving to go to their jobs. People are flying a lot less, so on and so forth. And still crude is back to where it was pre-COVID. Why is that? In my opinion, there are two basic factors. Factor number one, inflation. Factor number two, I think the damage that has been done to US oil production, especially under Biden administration, but that's secondary in nature, is irreversible. I don't think that the US will probably ever be able to come back to the crude production competitively. That's what I believe.
Fair enough, yeah. Yes.
So, reduction in demand, but I think reduction in supply as well. Of course, in conjunction with OPEC, limiting supply from their side as well, clearly, right?
Yeah. Yes. So, oil is definitely very interesting to watch, and the divergence, like you said, with risk with equities is clear. And I think that oil should be. I mean, if we do get this daily reversal today, I think we're going lower, but obviously we need to wait. Equities are rallying now, going back towards green, which is Monday. So
Friday we had a big rally, to be honest. I mean, we had a nice tweezer bottom here in the S&P, and to be absolutely fair, Stelio, if we do break higher from this, this is going to look like another orderly corrective move lower, right? So it's not out of the question that we can see another push to the upside in stocks.
Yes.
But in my opinion, that's still not going to change the fact that this move higher, now that we've from March, 20th of March to a few days ago, even if that was the end of this corrective move, which hasn't broken the trend. Why hasn't it broken the trend? Because we still haven't posted a lower low. I wrote that to the end of week analysis. I mean, we've broken down from this trend line, but we still have a sequence of higher lows. This low that we saw on Thursday and Friday morning isn't a lower low than the low that we had at the beginning of February, right? So there is a chance that we can see another push to the upside, but that won't change the bigger picture that, in my opinion, we're much close. We will still be much closer to a serious corrective move lower before the market can move higher once again. I don't know what the catalyst is, and I couldn't care less, because it's not that fundamentals are actually driving this market. If it was, it would have been a lot lower than it is, and it would never made it here. But I don't think you should be buying it even if we break out, unless, of course, we're talking about short-term horizons. I mean, if you want to buy it like for a few days, a few hours to a few days, if we break higher, I understand it. But buy to hold at these levels after such a move higher, I don't think that's where you should be.
I agree. Dale, do we have an interview today? Do we have an interview, Dale? We should do.
Yes.
Oh,
yes,
yeah. Okay.
Del.
Is he?
And Nick is here.
Oh, Nick
is here.
Great. Okay. Perfect.
Okay. So
we'll see you in about 45
minutes.
Yes. Thank you, Dale.
Yeah.
You're very welcome, Stells. Plural. Stells, plural. Hi, Nick. Welcome back to Face. It's been a long time since I've talked to you. Just waiting for you to unmute. Hello, Nick.
Hey, Dale, how are you?
Good, buddy. Wow, it's been such a long time. Let's not let this much time go between you and I having a conversation about the markets. You want to share your screen? It's a green button there.
I do. Perfect. Let me just see which one. I have so many up here. Let's see here. This one should.
So how have you been through all this COVID stuff, Nick?
Oh,
you and the family.
We've done well. How about yourself?
Pretty good.
Excellent. Yeah, we've been very blessed. No problems really, and I thank the good Lord every day that we've had a really we've been prosperous through this time as well as healthy, and can't beat that.
And your health is your wealth, so
That's right.
All right. Okay, so what are we looking at? We're looking at Apple.
Yeah, I have a chart of Apple here, but I don't really want to show that. What I really like to show would be the NASDAQ, if that's okay with you.
Yeah, that's perfect.
Okay, so here we have a chart of the NASDAQ composite. And like everything else, we topped out on the 16th of February. I think this is a major top. I think that we are looking at major turbulence throughout the entire 2021. And, I always come on here and reference the Gann cycles. And this is a big Gann year. Last year was as well. The 1 year of a decade is always a turbulent year.
Interesting.
I know we have a lot of money printing going on. I know there's a new stimulus package that's going to be passed this week. So we're going to get some short-term bounces in here. It will be a trader's market. But the reality of it is there's bigger problems going on in this marketplace. And I think every trader out there, if you're a trader, you should be well aware of it. I didn't get to hear your last guest for too long, but I think he had something similar as far as the sentiment goes. But the NASDAQ has been leading the market for ages now. It really
led up and led the way, and it's leading the way down.
That's right. It's leading the way down, and we're starting to see breakdowns go on. Bond yields are starting to move higher. Obviously, we know the 10 and 30 year are moving higher, but that really, in my opinion, isn't the story. I think the bond market is telling us there's bigger problems going on in the repo market. And when the repo market starts to break down, that's really a problem for the stock market overall. So I think
is that why, Nick, if I can interject something, when you think about what's happened in the last 12 months, not many markets have given back all the gains from either the Fed's jawboning or their actual intervention in corporate bond markets. I think they even junk. The treasuries have been the weakest sector in the bond market. You have any explanation why what used to be the flight to quality has suffered more than junk or corporate debt?
It's a great question, but the reason is that treasuries might be the real junk. And,
okay. All right.
And
you're right.
Think about it. Just for a moment, treasuries might be the real junk. Who would want to own a U.S. Treasury when we have the policies in place that we have now, and you have so much debt piled on, and it doesn't seem like there's any other way but to pile on more debt. So finally, investors are saying, if I have to own a treasury, I got to get paid something to do it. And what country is going to do it? You know, and we're looking at all of the same stuff going on around the world. I think I have not been bearish in a long, long time.
I remember you were real bullish last year. You would like the airlines.
That's right. That's right.
And they rallied strong from the April lows, and so I mean, this is the most bearish I've heard you probably
in a long time.
4 years or so, Nick. I mean, when Gann was saying the same thing, and it was the Fed's birthday. It was something with the Fed. So
that's right. Yeah. The anniversary, sure.
So what does this mean for the dollar? I mean, the dollar was way overdue for at least a bear market rally. I mean, one of the most crowded trades was, you can't come up with a fundamental narrative for being bullish a dollar with all this money printing. Is this going to be just a reaction in an ongoing bear market, or could something else be happening in the dollar?
Well, there could be more happening, but the dollar is still the world's reserve currency. They're trying, I think the global people in charge here are trying to make it not the world's reserve currency, but that will take years to unwind. So I'm actually bullish the dollar right now. I think the US dollar index, which I have the chart up, I think it's headed to around 95. And then we'll see how it reacts there. But I do think the lows are in for now. And I think as the markets around the world, not only the U.S. markets come down and they start to sell off, I think that's where we'll see the dollar start to strengthen. I'm also a bit bullish on gold right now, too, because gold has been really correcting for 8 months now, and nobody seems to like it anymore. And
you're right. DSI has been like 12 and 15 and can't find a lot of bulls. Do you have a gold chart?
Yeah, I got a gold chart right here, and
because I'd like a 1680 level. So you would start accumulating the
right
bullion. Now, what looks better, the bullion or the miners?
I like the miners, and I'll explain why. I think that the miners. Well, I'm just going to go to the GDX here, give us a good picture of the miners, and this is a daily chart. You'll see that. Here in August, we topped out. We've been making a series of lower highs, which is very bearish. But watch this. This is pretty neat. If you move over to your weekly chart, and we're just going to throw up a little Fibonacci here. I'm going to go from here to here, and we're right into a 50% fib retrace, right into the 100-week moving average. This is where the prior breakout occurred. This is where I like gold miners right now. I think gold miners are a very, very good place. If they fail here, then we're going to go a lot lower, probably into the mid to lower 20s. But this is a shot. This is where you got to give it a shot. I do own the GDX at this point in time, and I like this play a lot right now.
Okay, GDX, where are you wrong if we take out 30?
Yeah, basically, I'd give it a little wiggle room to around 29 and 3/4, 29 and a half. Any weekly close below that, I got to move out. That's all you have to give it. But this is such a big level. You should get a reactionary move right now. I think this could get an easy bounce to 36.
Okay. And so if you like gold, you have to like silver, because actually up until maybe last week, it's been way outperforming the gold.
Absolutely. The silver chart has definitely been a better performer than gold on a daily chart basis, but it has come in a little bit. So I do like silver, but what I don't love about silver right now, or I should say the silver miners. So I think the gold miners are a better play than the silver miners. Silver is still a better looking chart than the gold chart.
Okay, and to the left is the silver miners or the silver?
This is just silver right here, the silver futures. And you can see that we put that peak in over here on early February, and then we pulled back a little bit. But it's still a very, very strong chart, especially when you look at the bigger time frame. Look how this is really, in my opinion, forming a consolidation to go a lot higher. So I just think this pattern is not completed yet. Whereas the gold chart, we've really come down quite a bit into the monthly 20 MA. First hit into a 20 MA, usually from an extended move, is always a bounce play. So I like gold here. I like silver here. I really like gold miners best.
Okay, so talking about a strong metal, copper has been relentless.
Copper has been really the metal of the year. This is something anybody that's listening that was a member of mine knows. Back last April, I got very bullish copper. Now I do think that it's gone somewhat parabolic, and
Yeah.
we need to pull back a bit because it's so overbought. But it could still be another move ahead after a correction. But it needs, in my opinion, to correct now. It's just gone too far too fast.
Okay, let me ask you, with this being the first year of a decade and your negative bias on equities, you have any numbers in mind? I mean, I could make a case for like maybe first 3,500 in the S&Ps, then a bounce, and then maybe 3,000. Do you have any numbers that you could put to how deep a correction could be in equities?
Yeah, so let me just put up a daily chart of my S&P 500, and you'll see if we take out the lows from last week, which were, you know,
20, 37 and a quarter.
Yeah, 37.23, I believe, right?
Yeah.
So
yeah,
we take that low out on a weekly basis. This is headed down to 3,400,
okay,
and I around 34 to 35, like you said. But ultimately, I think we're going to 3,200. And
okay,
and I'll just talk about that level right here. If you see here, we're going to go down and test that pivot low from September. And if that breaks, Dale, if that breaks, then you got to really be careful, because then we're game for 2,700, maybe even 2,750, 2,550.
okay.
So there's potential for a lot more downside.
Okay. Anything else on your radar that you want to talk to us about?
Yeah, so we talked a little bit about the NASDAQ, and I think on every bounce, the NASDAQ is potentially a sell. Now, I just got out of my QID call options, which was a play on down NASDAQ. It's a double short play. But I think you can reload that trade on any significant, 5 to 10 day bounce, 5 to 7 day bounce. I think you can reload and get short technology. I think the NASDAQ is really the one area here that is vulnerable. Now, at the moment, you do have, let me put the weekly up here of the NASDAQ, and you'll see we came down to the 20 MA, actually got down below 12,500. We're getting a little bit of a bounce. So the trend is still strong here, but ultimately, as long as that top holds, this is probably a short for a fair amount of the year.
Okay, so I can't not ask you about it, and I'm sure your community, whatever becomes parabolic becomes a center of interest for everyone, and what a phenomenal move Bitcoin has had. And are you embracing it here? I bought want to hear a funny story? I bought GBTC at 5 and sold it at 7 and thought it was a great trade.
Well, it was a great trade.
and then it went to what, 70?
Yes.
Anyway, so are you getting a lot of clamoring? And I know your business model is in the money stocks, not in the money crypto. So what do you do with people that they gravitate towards whatever is moving up the hottest deal is where they go?
So crypto has definitely been the hottest deal. I don't trade them, and the reason, but my partner does, and the reason why I don't trade them simply is I just can't grasp it. I have to. It doesn't produce anything. It doesn't give out a dividend. It doesn't have anything tangible, and you need dollars or you need some other form of currency to buy it. So personally, Dale, I've never traded the cryptos, but I chart them for a lot of people. And here, obviously, we went parabolic, and this is a daily chart, and then we've come down, and now cryptos are making another move. I can't rule out that they can't go higher in this uptrend, especially in a mania. But what I do think is happening is I think we're building a parabolic position, and what goes up comes down, as you said before. And if you just look at, say, a monthly chart, you know that it's unsustainable when you go up in this kind of angle. Markets can never go up 70 degrees or higher for very long. They're going to come down pretty much the same way. You could take a look at GameStop. It was the same exact type of pattern. And I think ultimately the cryptos find their way back down.
Okay, so it's interesting you bring up GameStop and these I'm a big believer in communities, but I never could have dreamed that retail people getting together could squeeze the shorts so bad that their eyeballs were popping out. I mean, you're kind of like my generation, Nick. I'm not
Yes,
saying
I
you're
am.
as old as me,
No, I am.
but
I am.
you trade the legacy markets and everything.
That's right.
So I was wondering, what is going to change that particular behavior, and
Well,
do you think that they really do have this kind of power, or it's being used as a cover story for bigger money that just doesn't want the flashlight or the light to be shined on them?
it's no doubt it's a cover story.
You
Uh,
think so? Okay.
Absolutely, absolutely. I've always said it. Nobody moves markets like that. Stock goes from basically $15 to 500. It went to in the pre-market this day, and then put a print of 480. Institutions are always in the shadows, and you could get somebody out there posting on that Wall Street Bets or Reddit board that they have out there. But we know for a fact, just looking at some of the talking heads on television, that they got involved with it when it was in the 300-400s. So we know for a fact they were driving it. And how institutions work, or I should say, how hedge funds work, when they know there's a hedge fund that is underwater, and for instance, Melvin Capital was one that made the news and is underwater. But we know, Dale, you and I have been in this business a long time. If there's one cockroach, there's a million. So
Yeah.
we know that there were many others that were in trouble. And once other hedge funds get wind of that, they're going to take them out because they want to get their clientele eventually. And that's just the way it works. Think about this. When Bill Ackman owned J.C. Penney and it was falling, were traders out there, were institutions out there trying to help them and buy J.C. Penney up? No, they were shorting J.C. Penney to the floor because they wanted the guy to take a big loss. That's just the way this business is. It's a business of gladiators and sharks, and that's the way it always will be. So there's no doubt about it. It was an institution that ran this thing up, and it was an institution that ran it down, and that's just the way it goes.
Yeah, it's definitely, definitely you have to be prepared for everything and anything in this business. I'd like to get back to since yields has been the story, or at least quoted by reporters as a story for the stock market correction. What has been the problem in the repo market? Because that started the fall before the COVID crash.
That's right.
So is the same thing appearing that banks do not want to lend to each other overnight?
That's right. And we're seeing when those problems and those cracks happen in the overnight lending market, that's telling you there's bigger problems out here. Now, how the Fed puts another patch on the problem, that remains to be seen. Can they do it? Can they fix it again? That's the $1 million story. But right now we're seeing, and believe it or not, yields going up is not necessarily a bad thing for stocks. Very often we've seen yields go up, even in the beginning of the Trump administration. If you traded back in 2004, 2005, yields went up a little bit. The market didn't really flinch much. But when yields go up too much, it becomes a problem. But the real problem is taking place in the overnight bank lending market. And that's where if these guys don't trust each other for 12 to 24 hours, there's real issues.
What are they bidding overnight rates up to during this, since you've been paying attention? Go ahead.
They're shorting the 10-year. And there's what they call a fail charge there. So it's not supposed to get under a certain number, and it's been getting a print of a negative 4.25%, and that's just unheard of. I don't track the repo market all that closely, but I always have some ears out there, and once I see there's problems there, I know if that coincides with me looking for a down stock market, that's a perfect storm.
Okay, God, I got so many pearls from you today, Nick. I could string a necklace. Number one, the first year of a decade is usually negative vis-a-vis GAN. You like the gold. Treasuries could be the new junk. And I'm not going to let this much time pass between our next interview. I'll get a hold of you and we'll schedule something for June. But at this time, you know, people that heard you may want to follow you and hear more of you and your work. If you'd like to show your website here, Nick, you could go ahead and do so.
Yeah, that'd be great. So you just come on over to inthemoneystocks.com. Check us out. We put lots and lots of content out here. I'll just pop that up there. Lots of content there. And you come over to our free action blog, get all of the writings that we put up there, everything you'll see, and check it out. My name is Nick Santiago. Here are my services: Bullseye Trading, Bullseye Options. We also run a day trading service, which has been really off the charts lately. A lot of action. As we get more volatility, you get more trades. It's just the way it works. And it's been a great year so far.
Well, thank you, my trading warrior brother. And you could find Nick on Twitter at ITMS, That'll lead you to the website, and not only website, but great insight from Nick Santiago. Thank you, brother.
Thank you, Dale. Appreciate it. God bless, buddy.
Same to you, bro. Okay, so that's a wrap for Monday. See everyone for Turnaround Tuesday. Remember, don't just count your pips, count your blessings. And we'll see everyone tomorrow. Thanks for your attention. Adios.